Welcome to lecture 3. Welcome to lecture 3, everybody. We are here in lecture 3, and as always, FX Pioneers Trading Institute, Lesotho. Will be going on with the foundation course and diving deep into the foundation aspects that you would need to understand in order for you to get started in the trading business. First of all, as always, you need to pause and read the disclaimer or the risk disclosure and read again the CFTC Rule 4.41. So welcome to lecture 3. Welcome to lecture 3. As always, the bulls and the bears. We are in the market of the bulls and the bears. We all know that. And we are trading to make profit in a trading business. It's called business because it's business only when it's been done for business purposes, for the purposes of making money. If it's not done for the business, we are not for it. We are in the business of trading. So this is the basic foundation, lecture 3, where you will learn of other important aspects that you would need to understand. Okay, so for this lecture, you will be learning how to choose and verify a broker, and you would understand whether you can really earn a living, which is making money with trading, and why and how safe is trading, and to what degree can a person trust it. These are important questions that everybody has and would like to know before they start a trading journey. And you will have a brief of how to win in a trading business and what do you need to get started in trading. And it will also talk about the types of charts in the trading, in the Forex, as you can say. So, how to actually choose a broker? Why is choosing a broker important? It's important to have ability to choose a broker because the broker will be holding your funds. So if the broker will be holding your funds, you need to trust such broker with your funds. If you're not trusting such a broker, it won't be a good business for you and you will regret uploading your funds into such broker. So why choosing a broker is important? It's important because the regulated broker follows a strict financial rules set by a government authority to protect you as a trader or to protect traders. The benefits of using a regulated broker would include safety of your funds. You will ensure or you will have safety of your funds, and your money will be kept in a separate bank accounts from the broker's operational funds. And you are eligible to fair trading practices. By choosing a correct and regulated broker, you are eligible to fair trading practices. This is what you will get for choosing a regulated broker. No price manipulation or no unfair trading conditions that you would experience when you choose a regulated broker. And again, dispute resolution. You can file a complaint in the broker's acts that are unfair to you. Since a broker is regulated, you will be knowing the regulatory body of such a broker. You can file a complaint to such regulatory body of such broker. So, meaning that you may have your issues, most definitely will be resolved. And again, a regulated broker has a lot of transparency. They are audited and must disclose financial data. Since they are transparent, this means that they are regulated and they are audited. They are regularly audited as to how they are treating their clients, the services that they are providing. Are they providing such services well? Are they doing whatever that needs to be done? Are they not violating any rules? So therefore, that is transparency. They are checked regularly by their regulatory bodies. So, for you to choose a broker that is not unregulated, they can be in the position to manipulate the price. They could delay your withdrawals. They could always, and most definitely, they will disappear with your money, which is not anything that you're looking for. If you're saying you want to be involved in the trading business, you are not looking for any broker that will be disappearing with your money. You're looking for the broker that whenever you request a withdrawal, you will get your money. Whenever you want to do deposits, you will do such. You won't be having any manipulation of the price. The unnecessary gaps in the market, you won't be having that. So these are the fruits of choosing a regulated broker. You need to choose a regulated broker because of these facts. So moving on. For us to choose this broker, we need to have a checklist. We need to have a checklist that will be outlining the requirements for us to say this broker is legit, the regulations, the policies, the compliance, the laws. By having such a broker following the laws, we need to also have the standards of such broker. We need to see the transparency. We need to see the rules of the broker in order for us to evaluate whether this broker is worthy of us using it or not. This is all the compliance of such a broker. So this is a checklist that we need to be looking at in order for us to say we are choosing this broker. We are not choosing this broker over that one. We will take this one, not that one. This is a checklist. Okay. So number one, a broker needs to be regulated. You need to verify the broker's regulation status. Failing to do this, you are in a very huge trouble. Things like those ones that we just talked about, having brokers to manipulate the price, having a delay in withdrawals, and again, disappearing with your money. If you are choosing any broker that is not regulated, they could do all such things. They would disappear with your money. They would manipulate the price. They will do whatever shit that is in the world that they can do because they are not regulated and you do not have a say as to what you can do. Even if you cannot report, even if you can report them, there's nothing that the regulated bodies can do because they are not regulated. They can only punish or give harsh punishments to the regulated brokers. Okay, so you need to verify the broker's regulation status. Every legitimate broker must be regulated with the financial regulatory body. If not, it's a big trouble. It's common sense. It's a common sense that your account should be safer with the regulated broker. Let me make an example. You cannot just go to any bank that you don't trust and put your money in such a bank. What if such bank runs away with your money the following day? What would you say? Who would you talk to? You need to make sure that such bank is regulated and has a good reputation in order for you to put your money into it, in order for you to make your savings into it, So you will need to go to the broker's website to look at the regulation details. We are still on this regulation. We are in step 1. Step 1 of the regulation, you need to verify that the broker's regulation status is in the right state. So you will need to go to the website of such a broker and see and check for the regulation details. They will be usually found on the About Us section or a footer section on the website. So example of a regulated broker example could be regulated by, and it will write the financial institution that has regulated it. For example, in this case, we are talking of FCA, which is Financial Conduct Authority. It's another regulatory body that regulates brokers. So on the website, it will be written regulated by the Financial Conduct Authority, which is FCA, under license number, and then their license number will be written over there. And they need to, the broker, there is no broker that can operate without having a proper regulated website. It needs to have a specific site which is regulated, which is the broker's website. You need to see and visit the financial or the official website of the regulator. If the broker is regulated by the Financial Conduct Authority, you need to go to the Financial Conduct Authority website and verify as to clearly and really such broker is regulated by such financial regulatory body. You see? So you need to go there and enter the broker's name and the license number of the broker and verify its registration. This is the step 1 of the regulation process. And then for step 2, you need to check the regulatory bodies of Forex by the region. You need to check as to which region is broker located, and therefore if you know which region, you will know that for this region the regulatory body is this one, for that region the regulatory body is this one. So different countries have financial regulators that oversee Forex brokers. So below is the list of them, and the list is based on the region, regulatory body, and their websites. For example, in USA, we have what you call regulatory body, which is called CFTC, which is Commodity Futures Trading Commission. It's based in USA, so most of the brokers, or for most of the brokers that will be located in the USA, they will have to be regulated by the CFTC, which is Commodity Futures Trading Commission. And again, they will have to be regulated by the NFA, which is National Futures Association. If the broker is from that region of the United States, it has to be regulated by these bodies. And UK, we have FCA. Europe, we have so many of them. We have CYSEC, which is Cyprus Securities and Exchange Commission. In Australia, we have ASIC, Australia Securities and Investment Commission. Canada, we have IIROC, which is Investment Industry Regulatory Organization of Canada. In South Africa, we have FSCA, which is Financial Sector Conduct Authority. And in Japan, we have FCA, which is Financial Service Agency. For these regions, and for example, let's talk of Southern Africa. In Southern Africa, most of the brokers that are located in the Southern Africa, they need to be regulated by the FSCA, which is Financial Sector Conduct Authority. It regulates most, if not all, the brokers that are located in the Southern African region. They are regulated by FSCA. So you would understand with your common sense that For the brokers that will be located in the United Kingdom, they will be regulated by FSCA, and the brokers that are from the nearer regions, they will be regulated by FSCA as well, and so forth. So the brokers are regulated with respect to the region. So you need to check the regulatory body and check the region where the broker is located. This is the step 2 of the regulation process, for you to check the regulation of such a broker. And on step 3, you need to check out the trading conditions. You need to check on the spreads. You need to check on commissions and other fees. You need to check whether this broker has a good spreads. By good spreads, I mean low spreads, low commissions, no hidden fees on withdrawals, deposits, and as well as inactivity fees. You should check all this. A good broker should offer low trading costs. It should offer low spreads, low commissions. It doesn't have to have hidden fees. This is the attributes of a good broker. This is step 3 of regulation. And again, step 4, there are few common trading platforms like MetaTrader, CTrader, TradingView, web platforms, and also proprietary ones developed and maintained by the particular FX brokers like Decascopy, JFX, and the other one. Okay, so you need to have a broker that uses the commonly used platforms like MetaTrader. In MetaTrader, we have MetaTrader 4, MetaTrader 5 for both PC, for both Android devices and iPhones. We need to have the broker that can use commonly used trading platforms like TradingViews, like NinjaTrader, like CTrader, like which is this one, like Trade Locker. Like there are many, like me. There are very much too much of them. Okay, you need to have a broker, or you need to use a broker that use commonly used trading platforms, that offers such trading platforms. And the commonly these commonly trading platforms like MT4 are a good start for the beginner traders. You can download and use the software on your PC, on your Mac, on your mobile devices like I've just mentioned. You will be able to try many brokers without additional learning curve or proprietary trading platforms, and enjoy extensive array of indicators that you will find on these trading platforms, which is MT4 and MT5. You would see vast amount of trading indicators. You can use them. You can learn how to use them, and you can implement your strategies and observe what happens in the trading marketplace when you implement your strategies as well. This is the step 4. And again, moving on, we have trading platforms in the trading, like we have just talked about. You need to take note of this. We have what you call MetaTrader 4, MetaTrader 5, CTrader, TradingView. We also have web-based platforms. This MetaTrader 4 and 5, most of them. In fact, MetaTrader 4 most definitely is very cool for the beginners, and MetaTrader 5 most definitely it's used by the advanced traders, and since it has advanced trading features, but also the beginners can use it. It's not restricted to whether you're a beginner or an advanced trader. We also have CTrader. It's great for professional traders, and TradingView is great for pros. It's great for professionals. And web-based platforms, it is accessible from any device. You can You can trade from the web. You can, even if you have forgotten your trading device at home, maybe you have forgotten your phone, maybe you didn't take on with you your PC, you can use this web platform in order for you to trade. Remember, we are still on step 4, and on step 5, execution spread, in fact, execution speed and slippage. You need to have a broker which is regulated, and you can be in the position to trade faster. What do I mean by that? I mean, when you place a trade, it shouldn't take about 5 minutes for your trade to be executed. The price will have moved by the time the trade is executed. So we need brokers that are offering real time execution. If I execute buy order now, the market should, in fact, my trade should be executed just now, because there is slippage in the market. There is all these sorts of things. There is a lot of uncertainty. There is slippage. So I need to, as a trader, I need a market, or I need a broker that can be in the position to execute my trade in real time. As now, if I execute a trade now, I need such a trade to be executed in real time. So we need brokers that have a certain execution speed, that are very fast to execute our trades, and this can help us to avoid a lot of slippage. And we do not need types of brokers that have a lot of slippage in the market. Fast trade execution ensures no delays. Slippage happens when orders are executed at the worst price than expected. Avoid brokers with high slippage. This is not the type of brokers that we'll be looking for. We're looking for the brokers with the minimal slippage. So step 6, we are looking for the broker that have certain leverage and margin requirements. You know that leverage allows you as a trader to trade large position size trades with a small amount of money or equity in your capital. In fact, equity in your account or capital. Regulated broker follows leverage limits set by regulators. You know, regulators have specific rules that they give to these brokers in order for these brokers to operate. So, therefore, among those rules, there are strict rules in terms of leverage. Legit brokers, most of them won't give you a lot of leverage, because they know very well that leverage could be used for you as well as against you. It will it could be a catalyst in you blowing your account because of having a lot of leverage at your disposal. You need to choose brokers that have leverage that is not that much, that won't allow you to risk all your money in trading. Let's not forget the fact that we said, still, even if the broker can have lots or large amount of leverage, you still need to implement the proper risk mechanisms in place. You cannot risk all your capital. You need to risk based on the amount of money that you have, and you need to risk in such a way that on the following day you still have opportunity to take on the market for the opportunities that will present themselves in the market. So we'll be having, most definitely, we'll be having the brokers that will give you leverage like 1:50 for the the United States of America brokers. I'm talking of legit brokers. And for Europe and UK, most definitely you will be getting the brokers that have leverage of 1 is to 30. And for Australia, we'll be getting most definitely leverage of 1 is to 30, you know. And for some other regions like uh, Africa and other regions, and again, even in the United States, let me say worldwide, we still have brokers that give you leverage of 1 is to 500, 1 is to 1,000, 1 is to 3,000, and 1 is to 10,000. A good example for this one of 1 is to 10,000 is FX Pro. If you go again and check FX Pro, you could see that the leverage that they have as a broker is 1 is to 10,000, which they call a pro leverage. And for 1 is to 3,000, as I could remember, there is a broker that is called Just Market. It offers the leverage of 1 is to 3,000. And for 1 is to 1,000, we have brokers like XM and others. And for brokers like 1 is to 500, we have brokers like Pepperstone. It offers 1 is to 400 and others. So bear in mind that the higher the leverage, the riskier it becomes for you to lose your capital easily in case where one uh, one one huh? In case where one may use a lot of leverage, you will be opening a lot of orders. Then you will be in the position to lose a lot because of using or overusing a leverage. Then, most of all, step 7, we are looking at the deposits and withdrawals. We are looking at that process of deposit and withdrawal. We are looking for the broker that you can easily deposit using different means of deposit. Could be e-wallet, it could be your bank, it could be uh, yes, your fellow online wallets. There are many of them. Things like AstroPay, um, PayPal, lots of them. We are looking for the brokers that offer vast amounts of deposit means and withdrawal means. You need to check the available payment methods for such a broker. Remember, we are still in the process of choosing the broker, so we need to check at the available methods of deposit and withdrawals. You need to check for the bank transfers, credit cards, e-wallets. You need to verify if the broker has a fast withdrawal means, like withdrawal that could happen within the 24 hours, that could happen within period of hours, that could happen within 48 hours, you know, that could happen within 3 days. We are looking for the fast withdrawals. We are not looking for the withdrawals that could take a month, that could take 2 weeks. We are not looking for the type of the brokers that are like that. We need to avoid brokers with withdrawal transaction fee that are high. We need to avoid such brokers. So unfortunately, the the strict regulation does not guarantee a positive trading experience. Otherwise, we wouldn't send our members periodic notification on our outrageous regulation findings like this one. Here, you can go to the Forex Space Army and see this. You see the comments of the people on the brokers. So to stay informed, you can join the Forex Peace Army and subscribe and see the people how they comment on the brokers. So This is exactly how you would see them. Okay, and